Talk Leighton, Brisbane Connect. It looks like private equity's been circling, but then again, well, certainly the chairman's determined to keep it a going concern before it falls into the hands of the hedge funds. What do you make of latest developments?
We've seen Leighton's with a $63 million write-off, and the write-off is for deferred equity. Now, Leighton's was the builder of Brisbane Connections, and it's been an absolute nightmare for Leighton's. We've seen over $1 billion in write-downs as well as losses just for Leighton. And of course, we know that Brisbane Connections in a trading hold at the moment, possibly examining whether it can continue as a going concern, and it's in talks with its lenders at the moment. So it looks like just Leighton's cutting the cord on this one and just writing off the value of any sort of link back with Brisbane Connections. Of course, Brisbane Connections does seem to be in quite a bit of trouble. We've seen a couple of the directors jumping off the ship this week, resigning. And if we have a look at some of the other owners, we know that Macquarie Group owns a 45% stake, Deutsche Bank owns a 33% stake, and the Queensland Investment Corp also owns an 8.3% stake. Now, if we do see this asset being sold off, what will probably happen is that equity holders will be left with nothing and the debt holders may need to take a haircut. So we're watching Brisbane Connections very closely. A lot of the losses and write-downs for Leighton's regarding Brisbane Connections has already come in the vicinity of greater than $1 billion, but today it just looks like the last bits of that $63 million being written.
What's coming next with CSR? Market seems to be more focusing on the next wave of growth than a disappointment on the first half net.
No real surprises here. CSR coming out with its first half result. We saw a result of $20.4 million. That's slightly ahead of what we were predicting, around about $1 million. So a slight beat there. But we know that it's a difficult environment in terms of the residential construction market. We've seen this market down by 15% over the half, and we've also seen the commercial construction market down by 6%. Now, the key for CSR is really to see a turnaround in those housing starts. If anything, over the last 2 years, we've just seen the housing starts forecasts getting lower and lower and lower. We really want to see a turnaround in that residential housing market. In terms of the aluminium, we saw aluminium prices down by 19% in Australian dollar terms. And I guess in terms of commodities, we've seen that fall in commodity prices, but the Australian dollar remaining stubbornly high there. So it does look like more hedging for its aluminium book. Around about 80% of the second half is now looking hedged. But of course, if we have a look at CSR as a business, this is a company with no debt. So when times are difficult, they'll batten down the hatches, they'll cut costs, and they'll just wait for the market to turn. So at a cyclical low at the moment, the good news is they're at a cyclical low with no debt. So when we do see residential housing construction starting to bounce back, expect a big bounce back in CSR.
Let's talk Dulux Group. Shares are pushing low by about 1.5%. Julia, certainly they've posted a lower annual profit number, but this is affected by a couple of one-offs, is it not, and also some tax benefits and mixed in.
We've seen Dulux's full-year result come in, and if we have a look at it on a like-for-like basis, stripping out some of those costs associated with Alesco, it's actually come in at $79.6 million, which is a rise of 2.6%. Revenue growth of 4%, and I guess if we have a look at Dulux's business, it's really being powered along by the Bunnings rollout that we're seeing at the moment. Bunnings has a pipeline for more than 88 stores, and they're aiming to open up around about 18 large format stores just in FY13. And this is great news for a company like Dulux. It really gives an avenue to be able to expand its business. So as long as Bunnings keeps on moving along and keeps on rolling out these large format stores, we should see momentum in Dulux's business continuing. So revenue up by 4% for the full year, and we've seen like-for-like profit up by 2.6%. We're also watching that Alesco acquisition, and it does look like it's getting pretty close now. We have a look at the institutional acceptance facility. It stands at 79.2%. Of course, Dulux would like to get up to that 90% level as soon as possible. But all in all, this result, in line with expectations, will continue to watch that Bunnings rollout to drive momentum in Dulux's business.